The Tennessee single article min-max tax rules is not your usual US sales and use tax scenario, and it can be a little confusing to understand. This video serves two purposes. The first is to explain how the Tennessee single article tax requirements would work, and second, to prove that it works in Oracle, albeit with a small workaround. A single article is defined as one item of tangible personal property that is considered by common understanding to be a separate unit. It should be capable of being sold as an independent unit. So for example, a dining room chair would be considered a single unit. Multiple items of tangible personal property sold in sets, lots, suites or other groupings that are sold for a single price are not single articles. So a dining room set would not be considered a single article. I have just entered an Oracle Release 12 payables invoice, and I'm using Nashville in Tennessee as the ship-to location. The tax for the base amount of $100 is correctly determined and split between the state, $7, and local taxes, $2.25. Changing the amount to $1,000 has the expected tax rates, 7% for state again, and in this case the local tax, also 2.25%. However, when I change the amount to $2,000, things start to become different. This is due to the min-max thresholds imposed. The state tax is determined on the entire base amount. So in this case, 7% on the $2,000 is charged. The local tax, and in this case, it is the county tax, as at the time of making there is no city tax, is capped and only charged on the first $1,600. This means for a single article purchase of $2,000, the local tax is only charged on the first $1,600. Finally, there is a special state tax due for the amounts between $1,600 and $3,200. With our example, that means that the special tax for the state is charged on just $400 of the line amount. Now let's put in $4,000. The state tax increases as its taxable base is always the total line amount. The local tax is the same as before, because it is still capped at the $1,600, but the special tax for the state has increased, but it's only changed for the amounts between $1,600 and $3,200, so the taxable base amount for this special tax is $1,600. When you change the amount to $10,000, the state tax goes up, but the local and special state tax remains the same due to those maximum thresholds. So if we take the line back to $2,000, and when we recalculate the tax, you'll see, as before, the state is $140, the local is $36, and the special tax is $11. However, if we now change the quantity, so that $2,000 is actually for two single items, the tax is now based on $1,000 each. The state tax is $140, as it is based on two single articles of $1,000 each. $1,000 times 7%, and then they are added together. The local tax is also based on two single articles of $1,000 each. So unlike before, where the single article of $2,000 was capped at $1,600 for the local tax, because each is now a single article, we have 2.25% tax on $1,000. Then these two are added together. Finally, as each of the $1,000 single article lines is below the $1,600 to $3,200 range, for the special tax to kick in, none is calculated. So if we change the quantity, so we have two lines of 2,000 each, so in effect a total of 4,000, you'll see that the tax does change again. But it's based on the fact that you have two lines of 2,000 each. We change this back to quantity of 1, recalculate the tax, you'll see the total amount is 2,000, and then the tax amounts have adjusted accordingly. We can do this as well, so if we put a quantity of 3 for the 2,000, you'll see that the state tax changes in line with the 6,000. The county and the special tax also increase, but they're multiples of 3 based on the tax line of 2,000 each.